Ladies and gentlemen, we're seeing some pretty big, I'm not going to call them optical illusions because I'm not a freaking magician, but pretty big illusions of breakdowns on these short-term charts, which I don't actually think are substantiated by the price action. Like what we're seeing, for example, on Bitcoin is Bitcoin breaking back into its prior macro range between these two yellow lines. It broke below it previously where I'm circling. It's back between them. The yellow lines stem backwards from 2017 and 2021 alike. Within that macro range, we have this triangle formation that I'm talking about that formed on Bitcoin over the recent 3 weeks, and we've actually seen a breakdown on the short term, not only a breakdown, but a breakdown with a resistance support flip as seeming confirmation. However, I'm not convinced that that breakdown is actually leading to anything because there's no volume surge, okay? No reaction via the buyers or sellers to this breakdown. Even though we've seen the resistance support flip, seemingly validating that level as a new resistance zone, the breakdown itself, not just the flip of resistance, doesn't seem to be very lively. Okay, because there's no spike in volume. And the exact same thing can be said about the Ethereum chart. Ethereum, much like Bitcoin, breaking back into prior macro ranges between the green box and the red box in recent weeks, forming a massive ascending wedge formation, a bearish structure. On short term, seeing a breakdown, right, with RSI validation as well, just like Bitcoin. But instead of seeing a collapse upon that breakdown occurring, we saw very, very little reaction in volume, and we've seen this breakdown mostly stagnate. So these breakdowns, in my view, at this point in time, are illusions. They're fake outs. They're traps. Now, we could see them develop. We could see them progress. But at this point in time, we actually have support coming from total cryptocurrency market cap charts, the total 1 and the total 3, which are, in my view, hindering these breakdowns and preventing them at this point in time from progressing any further. This leaves us with two major scenarios that I want to cover in this video. Scenario 1 is the bottom is right here and we go upwards from here. And scenario 2 is the breakdowns progress. We go downwards to around 93 to 96,000 and then we go upwards from there. Now, both scenarios, in my view, prompt the same reaction from us, and I'll get to that reaction towards the end of the video, so stick around for it. Guys, before we get into the content today, check out the Bitunix exchange. It's available globally, okay? Depending on where you're from, you might need to use a VPN, but it is globally available to pretty much everyone in the world. It's never been hacked before, which is a massive bonus. It's been on the market for 4 years. It's seen 2 bull markets and 1 bear market without a single security breach. Exceptional track record, and it's very low in trading fees with all of the regular market pairs that you would expect from a major exchange. I use this exchange personally. It's my main exchange now. I used to use BitGet a lot. Now I've switched over to Bitunix and I've been using it personally for over 6 months. I've had no problems. In fact, I very much like the exchange, which is why I've chosen to advertise it on my own accord. You can use my referral link down below to sign up and you will get a 15% trading fee discount with that referral link down below. So help out the channel and help out yourself. Use that link down below, get the discount and get on a solid exchange. So it's not surprising at all to me that Bitcoin has rejected from the $114,000 region. As we've discussed multiple times on this YouTube channel, that region is not just the basis of a 8-year-long resistance line, which is the top of our macro range, right? Stems backwards from 2017, all-time high, cuts through 2021. Very, very major resistance zone, marked for 2 separate tops we saw in 2024. There's no surprise at all that we reject from that region in the short term, especially after a big move to the upside. But it's further than that. It's more than just that one line. That one line would be enough, by the way, to justify what I'm about to say, but it's more than that, right? This level is bigger. It goes into things like this, the logarithmic regression channel, which we first mentioned on this channel about 5 days ago. Not many people have seen this. Goes right backwards to the origin of the Bitcoin cycle, just in the 2013 bull market, and cuts right across the recent highs, cuts through every single high we've seen on a macro scale on Bitcoin, and every single low, by the way. And it's flattening out right now at around 114,000. Now, a lot of people look at this and they think, oh my God, the top's in, it's over. But, well, I don't think that's really justified because, first and foremost, it's actually a logarithmic regression channel, as I said, and in that is implied that it takes into account diminishing returns, and it takes into account that eventually this line will flatten out. And unless you're willing to assume Bitcoin will never reach an all-time high again, you need to assume that eventually it will break. And given the fact we're testing it right now, after first testing it in December, with more than 5 months left in the 4-year cycle, as per the 4-year cycle date range trend, it seems logical to assume that it will break this time. Another reason why we're finding such a hard time breaking 114,000 is because of the USDT dominance chart. This is a chart that is reverse correlated to Bitcoin. It measures the strength of Tether, USDT, against the rest of the market. And when this chart increases in value, that means that essentially people are selling their crypto for Tether, and hence Tether is going up in value. When it goes down, that means people are using their Tether to buy crypto, and hence crypto is going up in value and this chart's going down. So this chart bouncing is a bad thing. And this chart is on major support right now, the same support which actually predicted the 2021 tops in the market. And so, of course, it's going to be hard for Bitcoin to break upwards here, given this chart is at such a major level of support. Now, I could go even further, but I feel the need to not do that, right? Look, we have the Powerwall chart. We have more things here that I can discuss and basically emphasize the point I've already made. I don't need to push it any further. $114,000 is a major level of resistance. It's no surprise we're rejecting from it on a local level. However, I want to make something very clear. Just because we're rejecting from that level on a local level, it doesn't mean that that's the bear market, start and the bull market top and everything's over. Because fundamentally, the only reason we're here in the first place is because of the 4-year cycle date range trend, which still suggests we have 5 months left, right? And unless you're willing to say that in the next 5 months, we're not going to go above all-time highs again, and this entire trend is going to fall apart and collapse here, which I think is a very, very bold assumption given the data we have at the moment, then you're baseless in assuming it's a bear market. So correction, and a correction from this region is not a surprising thing at all. So therefore, this short-term breakdown that we're seeing, or alleged breakdown we're seeing, is not surprising and would not be surprising if it actually was substantiated by short-term data. But even this short-term breakdown right now seems to be some sort of an illusion. Breakdowns and breakouts, doesn't matter where you're breaking up or down, are only going to be validated properly when you see a surge in volume upon a reaction to the line that is being broken. Meaning, people need to react to the line breaking, otherwise it's not really much of a breakdown. You're just moving below a support zone and turning it into a resistance rather than crashing down from a support zone and free falling, right? There's a big difference in definitions there. Have we broken down? Well, it depends what you mean by the word. Yes, we've broken down from a support zone, okay? We have flipped a support zone for resistance, but we're not in a crash at the moment. There's no spike in volume to support this price action, plunging further down at this point in time. That could change, but that's the same story here on Ethereum as well. So right now there's support coming from somewhere. The question is, where is that support coming from? And I think, personally, that support on a local level we're seeing is coming from the total cryptocurrency market cap chart. Now, this is a chart that measures the dollar value of every single dollar in cryptocurrency. It's currently at 3.2 trillion, meaning that there's $3.2 trillion locked up in crypto. And this chart broke outwards, not only from a diagonal line, but it also broke outwards from a massive cup formation. And you can see the neckline of that cup formation, which sits around 3.2 trillion, is currently being flipped for support. We are finding support on the neckline of that cup formation after the breakout from that neckline. And so in my view, until this neckline is lost, right, the market is going to be very resistant to moving downwards, okay? So the question is, will we lose that neckline or not? Another thing saying the same thing is the total 3 cryptocurrency market cap chart, which much like the total cryptocurrency market cap chart, measures the dollar value of all altcoins, so minus Bitcoin, minus Ethereum. Every single altcoin currently valued at around $841 billion US. And we had a similar kind of thing here, a cup formation. We didn't actually break the neckline on the altcoin market because the altcoin market still had a lot of recovering to do from the failures of earlier this year and last year. That's a whole different story though. But much like the total cryptocurrency market cap chart, it found major support after a brief short-term breakdown on this spike in the volume profile. So we have, breakdowns or seeming breakdowns, what a lot of people think are breakdowns on the short-term Bitcoin and Ethereum charts, which seem to suggest that we're going to be going down further in the next week or so. But at the same time, the altcoin market cap chart and the total cryptocurrency market cap chart are actually saying, hold on a second, these breakdowns are not substantiated yet. We have support in this local region, and as long as that support holds, we shouldn't see any downside price action. So I actually don't think that we're seeing breakdowns quite yet. Now, that leaves us with 2 options. We could either find support right here and hence trap everyone who thinks it's a breakdown and go upwards right from here, Or these breakdowns could substantiate and we come downwards and drop to a low level like 3 trillion flat, which is a psychological support level in the total cryptocurrency market cap chart, and also the basis of the 2021 all-time high, in which case Bitcoin would go downwards to something like 96,000 or 93,000, both of which are very important local levels of support, and then we go upwards from there. What I don't think is likely, to clarify, I don't think it is likely that Bitcoin goes down and crashes below 93,000, crashes below its macro range and enters a bear market, because that would not be a substantiated thing as per the 4-year cycle. So let's just put this into context here. The broader 4-year cycle says we have 5 months left and says that we should go higher from here at some point within that next 5 months. The short-term charts are indicating that a breakdown could progress within the next week, but it's not confirmed yet. And so if a breakdown does progress from here, which is not a certainty, it would go down likely to something like 96,000 or 93,000, and we'd probably bounce from there as per regular 4-year cycle, suggesting we go higher from here on a macro scale. Now, how do we react to those scenarios? Scenario 1, we bounce from here. Scenario 2, we go downwards first to something like 96 or 93 and then bounce from there. How do we react from that? Do we just buy right here because we're going to go upwards anyway? I personally, obviously I can't give you financial advice, you need to do what you need to do. I personally think we don't react at all. I am personally not, buying here, certainly not, because I do understand that although it's likely we end up in a higher position now than we are, it's likely we end up in a higher position a month or two from now than we are now, and it's likely the cycle does play out, it's not guaranteed, and so putting yourself in a position which you buy here means you could get trapped if this whole thing falls apart, which is a possibility, it's just unlikely. I personally think the place for buying would be down in this $93,000 to $96,000 region if we did go there, because you'd have a very tight stop loss potential at that point. For example, if you wait for the price to go down to 96 or 93, you could stop loss below that region and only risk a few percent. Whereas if you're buying right here, you're risking over 10% if we end up going right down to that region, even more than that. Or, if you want to be even more conservative, only purchasing heavily upon an actual break of the macro range would be another strategy you can take. So I think waiting for a potential further correction or waiting for an actual macro breakout as the move, I think touching anything here in this region is inherently very, very risky. That's not financial advice. I'm not legally responsible for any profit or loss you make. That's just me giving my opinion. So hopefully my opinion is giving you food for thought and something to think about. Guys, thank you for watching. I hope you enjoyed the video. And if you did, subscribe, leave a comment, like, but also check out, as I said at the start of the video,